Electric air taxis. I mean, it literally sounds like something straight out of a sci-fi movie, right? And for early believers, this space offers truly massive upside. But let's be real for a second. In the everyday world of investing, betting on unproven, capital-intensive transportation carries the very stark reality of permanent capital loss. So we have to ask ourselves, is the sky the limit for Joby Aviation, or is this just a wildly risky bet?
To really put the stakes into perspective, I want you to anchor your expectations to this number, $40. That's a technical price target for the year 2028, projected by analysts who are charting the stock's long-term momentum. Now, considering the stock is sitting right around $9 today, yeah, the potential runway here is absolutely massive. But actually reaching that altitude, well, that's going to require near-perfect execution.
Welcome to The Explainer. Today, we're putting Joby Aviation under the microscope. Our goal here is straightforward. We are objectively evaluating Joby as a viable long-term investment. We're going to strip away all that futuristic hype and just look at the hard facts, the financials, and the charts. Here is our flight plan for this explainer. We'll start with 1, the business of air taxes. Then we'll look at 2, pilots at the helm. 3, checking the financial fuel. 4, finding the intrinsic value. 5, market trends and catalysts. And finally, 6, reading the Elliott waves. Let's jump in.
All right, starting things off with Section 1, the business of air taxis, the vehicle and the route. Let's zoom in on what Joby actually does. Okay, so Joby's core concept, it's brilliant. Replace ground transport and helicopters with electric aircraft to just fly right over urban congestion. But execution is incredibly complex. On the pro side, they're building a massive competitive moat through vertical integration. They do the design, the manufacturing, the operations, the whole shebang, and it's protected by over 330 patents. Plus, they have some serious heavy hitters backing them. Toyota threw in hundreds of millions, and Delta Airlines is stepping up to handle distribution. But you absolutely cannot ignore the glaring cons here. FAA type certification is still totally incomplete. And on top of that, this entire urban air mobility market is just in its infancy. Consumer acceptance, price sensitivity, how often these things will actually fly, those are complete unknowns right now.
Moving right along to Section 2, pilots at the helm, management analysis. Let's take a look at who's actually steering the ship. When we evaluate founder Joe Ben Bevert and his team, what stands out is their focus on rational execution over pure hype. They're grinding through the certification process and funneling their capital straight into R&D and infrastructure, which, honestly, is exactly what you want to see before a company hits profitability. Their financing has been super disciplined and links to actual milestones, and the founder has meaningful equity alignment, which is always a great sign. So overall, management definitely earns a passing grade for execution. However, and this is a big one for you as an investor, you have to note the ongoing shareholder dilution. Think of it as the necessary, incredibly expensive fuel for their current growth engine. It keeps them in the air, sure, but it's a massive point of value friction that the markets generally do not like. That brings us to Section 3, checking the financial fuel, the balance sheet. Do they actually have the capital to reach their commercial destination? Well, the short answer is yes. And it looks a little something like this. $2.47 billion. That is Joby's massive war chest of cash and short-term investments as of Q1 2026. This gives them a financial runway that extends well beyond what they need for their planned 2026 commercial launch. And this contrast perfectly illustrates the extreme tension in their financials. On one hand, you have this incredibly heavy cash burn. Owner earnings are deeply negative. I mean, they saw a $930 million net loss in fiscal 2025, though to be fair, that was largely driven by non-cash items, and they are projecting a $340 to $370 million cash burn for 2026. But fighting against that intense burn, you have a literal fortress of a balance sheet. That $2.47 billion in cash is paired with very minimal traditional debt. Plus, they're sitting on $1.66 billion in tax carryforwards for future offsets. Make no mistake, this is a financial structure built specifically to withstand some severe turbulence. All right, let's crunch some numbers in Section 4, finding the intrinsic value, calculating the destination. We're shifting from qualitative vibes to quantitative valuation using a 2-stage discounted free cash flow model. Now, this valuation model leans heavily on a high growth period stretching from 2026 to 2035. If everything goes right, in an optimistic scenario, meaning a rapid revenue ramp-up, intrinsic value could reach $15 to $16 per share. But the pessimistic scenario is pretty stark. If FAA certification gets delayed by just 2 years, intrinsic value plummets to $7 to $8, which is actually below today's market price. And if demand completely falters, well, that value could crash down toward their net cash value of approximately $2.60 per share. Let's ground ourselves with a base case calculation, though. When you factor in their cash, shares outstanding, and project them to hit break-even by 2029, it yields a base case intrinsic value of $12.15 per share. With the stock trading around $9 right now, that offers roughly a 33% upside. Look, for a high-risk stock, that's a pretty modest margin of safety, but it does prove that a credible, math-based path to scaled operations actually exists. Let's check out what's moving the needle in Section 5. Market trends and catalysts, tailwinds. What's driving real-world momentum for Joby today? Joby is rapidly moving from just a cool concept to actual reality. Physically, they've launched this Electric Skies national tour, and they're completing real point-to-point flights in highly complex airspace like New York City. And guys, these aren't just PR stunts. On the regulatory front, a huge catalyst is their selection for a White House-backed pilot program spanning 12 states. This is a game changer because it allows for early commercial operations before full FAA-type certification, all while they've already knocked out 3 of the 4 key FAA reviews. And behind the scenes, their new Dayton, Ohio facility is gearing up to pump out up to 500 aircraft a year. All of this is coordinated by integrating Airspace Intelligence's AI platform to proactively manage high-density flights. It's seriously impressive stuff. Finally, we reach Section 6, Reading the Elliott Waves, Technical Radar. We've looked at the fundamentals, but let's see what the technical analysis suggests about when this stock might actually make a major move. Shifting our focus to the technical side, analysts have identified a really fascinating, complete 5-wave impulsive structure that spans all the way from late 2024 to a projected peak in 2028. Let's walk through this timeline together. Wave 1 was that strong initial advance. Right now we're analyzing Wave 2, which is this deep correction zone, pulling the price down to around the $8 to $9 mark. The core technical thesis here is that we are likely at or very near the absolute end of this Wave 2 correction. If this level holds, it sets the stage for Wave 3. And in technical analysis, Wave 3 is traditionally the strongest, most aggressive impulse wave. It's projecting a target zone of $26 to $30 by mid-2027. After a brief breather in Wave 4, we'd theoretically see a final push in Wave 5, targeting that $36 to $40 mark by 2028. What's cool is that the underlying technical indicators actually support this bottoming out thesis. Look at the RSI, the Relative Strength Index, which tracks momentum. It's sitting at 34.37. It's rapidly approaching oversold territory, which basically means the selling pressure might just be exhausted. Combine that with a massive volume expansion of nearly 62 million near the bottom, and these signals strongly imply we're in a potential reversal zone right where the stock sits today. Now hold your horses, we have to stay completely objective here. Elliott wave analysis is highly subjective. A decisive break below this $8 to $9 support level completely invalidates this entire wave count. Actually, scratch that. It invalidates the whole technical thesis. Furthermore, the exact bottom of Wave 2 hasn't been conclusively confirmed yet. You really want to wait for clear price stabilization. And always remember, because this is an unproven concept stock, all those fundamental uncertainties we discussed earlier, they still heavily dictate the ultimate technical reality. So what does this all mean? We arrive at the ultimate tension of this entire analysis. Does Joby's fortress balance sheet and $2.47 billion cash runway truly outweigh the massive, looming risks of delayed FAA certification and totally unproven market demand? That is the crux of your investment thesis. The capital, the management, the early momentum, it's all there to potentially revolutionize urban transport. But man, that execution window is tight. Keep a very close eye on their upcoming FAA milestones and passenger volumes from those early pilot programs. Thanks for joining me on this explainer, and keep learning.